I'm actually ready if you can. Are you able to? Oh, okay.
Morning and welcome to Saxo Bank's live market call. Today is January the 4th, or the first Friday of year 2008. We had some pretty interesting figures being released both from Europe as well as in the US. In the European session, worth highlighting was the German unemployment change for the month of December, coming out at minus 78,000 against an expectation of 35,000, minus 35,000 that it is, with also a prior figure being revised up to minus 57,000 from 53,000. So pretty disappointing German employment figures, or rather unemployment figures, where the unemployment rate for the month of December was reported to be at 8.4%, which was just marginally lower than the expected figure of 8.5%. However, still representing a pretty high unemployment rate or unemployment level. Right after German figures, we had Eurozone M3 monetary aggregates released for the month of November. The yearly or year-over-year figures are at 12.3%, basically in direct continuation of the previous figure of 12.3%. Again, slightly higher than expected and showing pretty robust monetary expansion in Eurozone. We had the Czech budget balance coming out at a pretty large deficit, representing a 66.4 billion Czech koruna deficit against a prior figure of a surplus, 12.8 billion, so a major, basically a budget problem in Czech Republic. Later in the afternoon, we had a string of leading employment figures, basically ahead of today's non-farm payrolls. The ADP employment change for the month of December was a positive 40,000 against an expectation of 33,000, so a sort of a slight positive surprise in the ADP figures. Likewise, the previous figure for the month of November was revised up, or rather down to 173 from 189, so another positive surprise there. Followed by the initial jobless claims for the last week of December, out at 336,000 against an expectations of 345,000. So another positive surprise in the U.S. employment figures. Later in the afternoon, we had the factory orders, again from U.S. for the month of November, showing a industrial expansion of 1.5%, and this against an expectation of only a 0.5% expansion. So this was yet another sort of a positive surprise from the U.S. To go hand in hand with this, we had the prior figures for the factory orders being revised up from 0.5% to 0.7%. Later in the U.S. session, we had the quite crucial total vehicle sales being released for the month of December. The reported figure was 16.3 million vehicles against an expectations of 16 million vehicles. Although this sort of was a positive figure and exceeded the expectations, we had a number of U.S. car manufacturers, most importantly Ford, sort of coming out with rather bad estimates for 2008. So despite the good vehicle sales figures for the month of December, the U.S. auto industry in yesterday's trading session took a quite considerable blow, which was followed right in the Japanese session with both Nissan and Tokyo taking considerable losses on their negative 2008 sales estimates. Earlier this morning we had the Swiss CPI figures for the month of December showing a price increase about an expected level for the month. Month over month, this was 0.2% against an expectation of only 0.1%, and the yearly figure was 2%, again over the expected value of 1.8 figures. So it is sort of natural to expect that the already hawkish stance by the Swiss Central Bank is only going to be further bolstered after these figure releases. On the marketplace, the yen is stronger across the board. The dollar yen was briefly testing a critical support level at 108.23, not being able to break this, however, and rapidly correcting higher from 109 and is already firmly over 109. But still, the dollar yen is at very sort of low levels, despite the fact that Japan was closed till yesterday. The dollar is still under pressure despite the positive dollar figures or US figures from yesterday, and this is basically markets in anticipation of non-farm figures and shying away, of course, from taking large dollar positions or positive dollar bets. Fixed income, the treasuries are lower, primarily on inflation concerns as the crude prices are ever rising, whereas the European bonds are higher, and JGBs as well on Nikkei's almost record-breaking losses in the first session of 2008. On the equity side, the US stocks were somewhat mixed. Standard & Poor's was unchanged. Nasdaq marginally down at 0.27%, and Dow Jones marginally higher at 0.10%. So somewhat of a mixed U.S. session. Again, clearly the markets are anticipating or are awaiting the non-farm payrolls before taking any large bets. On the Asian session, however, Nikkei was down over 4%, and this is the lowest level in 17 months. So quite a bad opening in Japan, while the Hang Seng was in stark contrast up 2% or over 2%. On the commodities, gold and crude seem to hold on to their earlier gains. Gold is firmly above $860 on the spot market, an ounce, and crude was briefly revisiting the $100 territory, briefly in fact puncturing this on a break higher, and then subsequently retreating to $99 a barrel level. It's also interesting to note that platinum is now at a record level at $1,552.50, recorded earlier today. So what's going on? As mentioned, the Nikkei 225 is off to a really bad start in 2008, registering losses over 4%, a 17-month low as was mentioned, and we can sort of summarize this on triple concerns of higher yen values, especially against the dollar, hurting naturally the Japanese exporters, for whom the U.S. marketplace is very important, and for whom, of course, the dollar-yen rate is very crucial. We can also pin this down on higher oil prices, affecting not just the Japanese economy, but all sort of the developed economies, and finally the faltering U.S. economy and this uncertainty as to whether the U.S. will slide into a recession or not. So basically a triple effect dragging the Nikkei massively down. The losses were led by high-tech and automobile companies in a session where the losses were indeed over 4%. On the U.S. rate front, it's interesting to note that already 34% of the market is expecting a 50 basis point cut at the rate decision by FOMC or by the Federal Reserve on 31st of January, and we sort of at Saxo Bank believe that this is a sort of a overestimation or over expectation, if you like, and we will be most likely seeing a 25 basis point cut. Today's non-farm payrolls, obviously the big item of the day. For the month of December, the expectation or the median estimate is 70,000 new jobs. The range is somewhat narrower than in the previous months, with the expectations ranging from 34,000 to 106,000 jobs, but we can safely say that any figure above 60-70% or 60 or 70,000 jobs will be perceived as a pretty robust, pretty positive figure. So what is on today's calendar? At 9:30 GMT, we have the UK mortgage approvals for the month of November. Going straight into the US session, 1:30 GMT PM, we have both the non-farm payrolls as well as the unemployment rate for the month of December being released. The expectations, again, for the non-farm payrolls is 70,000 new jobs, the median expectation that is, and the unemployment rate 4.8%. Right at the same time, we have the Canadian industrial product prices as well as the raw material prices being released for the month of November, and at 3 p.m. GMT, we have the US ISM non-manufacturing. We've already seen the manufacturing figures being released earlier this week, and they disappointed us, as you may remember, and now it is the turn for the non-manufacturing figures to be released. Our FX recommendation of the day is actually twofold, or triple-fold, you may say, as we have a breakout trade in euro-dollar, where we believe that the upside is more likely. On the upside, we are buying the pair at 1.4781 bit, with a target of 49 the figure. And on the downside, we are selling the pair at 1.4687 offered, with a target of 1.4581. And we will be using 35 pip trading stops on both of those, or on either one of those trades. The second trade is a dollar Swiss, and this is basically in continuation from our yesterday's recommended short position. So we are basically recommending that for those who have taken this position already to maintain it with a target of 1.1060, but moving the stop down to 1.1150 as the trade has moved in our favor. On the equity side, we are selling a French cosmetics producer, a very famous L'Oreal, trading on the Paris Stock Exchange. Obviously, this is a company whose products, of course, cater for the upscale markets, and with the general global economic slowdown, we believe L'Oreal to be one of the sort of parties clearly not benefiting from the slowdown. We've already been filled around the opening of the Paris Stock Exchange at 95 euros, 95.1 euros. We are keeping a stop loss at 100 euros, and the target is at 88 euros for this trade. And the timeline is several days, as it is a longer period trade. That is all for me today. Thank you very much, and join us for the second week of 2008. Thank you. Bye-bye.